Now on BBC News, the latest from New York and around the world. Business Today.
Live from New York at the opening bell, this is Business Today. Wall Street turns higher after New York Federal Reserve President John Williams says there is room for a cut in interest rates. Plus, inequality emergency. Leaders warn of the need to close global income gaps at the first G20 summit held on African soil. And UK government borrowing rises faster than expected ahead of next week's key budget. Welcome to Business Today, live from New York. I'm Michelle Fleury. And we start here in the United States, where markets have opened higher at the end of a volatile week. The turnaround follows comments this morning from New York Federal Reserve President John Williams, who said that the Fed could still cut interest rates in the near term without putting its inflation goal at risk. It follows a sharp sell-off on Thursday after strong US jobs numbers reduced the likelihood of a rate cut, and where even chipmaker Nvidia's stellar results couldn't stop AI bubble fears from taking hold. Well, to get more on all of this, I'm joined by Ed Moyer. He is from Market Intelligence and Strategist at AlphaSense. Ed, always good to see you. Help us make sense of this kind of roller coaster ride we've been seeing this week on the markets.
Well, thank you for having me. And yes, Wall Street has definitely been on a roller coaster ride. I think we've seen the market has gone from just a couple months ago excited about the hyperscalers' investment in an AI. They have strong balance sheets. And you also had high expectations that the Fed easing cycle was not going to be disrupted. And now there's been a big change. You've started to see that there's a little bit more of a disruption with in the credit markets. And right now there's concern that, well, the AI hyperscalers, they're going to be okay is the general theme, but their customers, are they going to be able to see a return on investment? Are they going to be able to pay for these AI commitments? And then on top of that, you've had mixed data from about the U.S. economy, and the Fed has seen a steady stream of hawkish comments, minutes, and today's dovish comments from the vice chair was definitely welcome news. And you're starting to see the markets are anticipating that if we do see more stress emerge in credit and debt markets, you're going to probably see the Fed be more in a position to cut rates again.
I mean, so you've got markets cheering those comments from the Federal Reserve this morning here in New York. But what's going on with Bitcoin? Because if I look at that, on Monday, we were, trading at around 95,000. Currently, it's down to about 83,000.
And when you take a look at how Wall Street has been looking at the cryptocurrency markets, it has, highly been touted as one of the more frothier parts. You've seen massive investments and also a lot of leverage in that space. And right now there's been somewhat of a deleveraging moment. You've started to see some exhaustion from interest in just seeing that use case argument for crypto. And I think you're probably seeing that right now. The general theme on Wall Street is that you're going to probably have more risks emerge in that space, as there's not a clear direction as far as where the next wave of excitement is going to come from. So that's why you're probably seeing a little bit of more nervousness there.
Yeah, certainly a lot of nervousness this week. Ed Moyer from Market Intelligence Strategist at AlphaSense, thank you so much for joining us.
Thank you.
Now, the G20 summit in Johannesburg gets underway this weekend, the first ever hosted on the African continent. This is a gathering of 20 of the world's major economies, but one of those, a key player, the US, is boycotting the event. A key issue at the summit is inequality, and ahead of the gathering, the Prime Minister of Spain and the Presidents of Brazil and South Africa released an article warning of an inequality emergency, something a group of former world leaders have signed a letter urging the G20 to form a specific body to look at along the lines of the IPCC, that's the UN group formed to assess the science on climate change. Well, Jayati Ghosh is Professor of Economics at the University of Massachusetts at Amherst. She's also at the G20 and will be presenting the proposal to leaders tomorrow. Professor Ghosh, thank you very much for joining us today. Your report shows that since 2000, the richest 1% have captured, 41% of all new wealth, while the bottom have got just 1%. I mean, that's more than just an economic crisis. It's a political crisis too, isn't it, especially for democracies?
That's absolutely our point. What we found is that while global inequality has reduced somewhat because of China and other Asian countries, in fact, it remains extremely high, and in recent years it has risen again. But what is worse is that wealth inequality has just exploded, and it's exploded in the most countries in the world. And what is more, the extreme wealth, what we've just mentioned, the top 1%, has actually increased dramatically. And a few players have exercised inordinate power over not just the global economy, but now global politics, global information, and global society, because of their control also over media. So this is an emergency.
Sorry to interrupt you there. So if it is an emergency, as you say, do you really think the G20 has the political will to treat it as such, especially when you've got big powers like the United States not even showing up?
Well, I think the initiative that President Ramaphosa has launched and is supporting is a very important one, because it's not confined to the G20. It is something that can be taken up as a plurilateral initiative by a few groups of countries, but it will study global inequality within countries, across countries, and in the world as a whole. It doesn't require the G20 necessarily to endorse it. We hope as many countries as possible will do so. It does require legitimacy, and we have found that many UN bodies and international financial institutions are also very willing to be supportive. The World Bank and IMF, the OECD have all come out in support, because they believe that having an international panel of experts provide reasonable, reliable, technically based data on the state of inequality, on the drivers of inequality, and on the possible ways to address it in a non-partisan way,
right,
and in a way that is not prescriptive, but essentially trying to understand what's going on, will be of extreme help to
very
government.
Briefly, sorry to interrupt you there, very briefly, I wanted to ask you about the role of AI, because certainly here on Wall Street at the moment, that has been such a big focus this week. People are worried about what it's going to do with jobs, but at the same time, we're seeing individual companies get richer and richer. What role will that play in inequality, but also in innovation?
Well, we feel that this is exactly one of the issues that should be explored in much greater detail by a panel like the one that we are suggesting. But certainly the current evidence suggests that AI is likely to add to inequality, and that we do not have the regulatory processes that would enable it to be controlled in an adequate way. So yes, precisely issues like AI and its impact on inequality is something that should be taken up by an international panel, and that would help us to formulate policies that would address it in the right way.
Yeah, you're shining a spotlight on a major issue. Jayati Ghosh, Professor of Economics at the University of Massachusetts at Amherst, thank you very much for joining us.
Thank you.
To the UK now, where it's less than a week until a crucial budget and the latest numbers on borrowing make for sorry reading for the government. They showed that the UK borrowed more than forecast last month, with borrowing hitting £17.4 billion to cover the shortfall between tax and income and spending. It was expected to be more like £15 billion. Meanwhile, for the first time since May, UK retail sales fell last month, and millions of households are bracing for a rise in energy prices. So how could this all impact the budget? Economist James Smith says the government will be taking a longer-term view.
Well, the figures aren't great, but what we've got to remember is that what really matters for Rachel Reeves and the Treasury is what happens to the fiscal rules. And the fiscal rules say that the government shouldn't be borrowing to finance day-to-day spending by the end of this decade. And the key thing really is by the end of this decade. So it's not so much what's happening today, and the news isn't great. We're overshooting the Office for Budget Responsibility's forecast by about £10 billion on borrowing. But it's more about later in this decade, and that's more contingent on the OBR's forecast for the economy, for productivity, and we know those are probably going to get revised down, which is why we're talking about sizable tax hikes next week.
Earlier this month, President Trump announced he'd struck a deal to lower the cost of some weight loss drugs like Mounjaro and Ozempic, potentially allowing more people to access the game-changing medications. But while perhaps good news for battling obesity, how will all of this impact the food industry? How will many of them adapt to this change? Well, we've been speaking to a food and drink researcher who advises some of the big industry players to find out.
It's an existential question. So could this be, one of the most disruptive things that we've ever seen in the food and drink industry? Because if it is, that's really bad news for indulgent processed food categories, things like snacks. So I think there's a lot of kind of soul searching in terms of, is this going to be something that has a fairly small impact, or is it actually going to be something where we have to completely change the way we've been doing business for the last few decades?
Now, in other news, the US has said it is exempting some more Brazilian goods from its 50% rate of tariffs. That includes beef, coffee and tomatoes. It had already exempted some major exports from Brazil to the US, like orange juice. There had been concerns in the US that these tariffs would push up prices. The US is the biggest importer of coffee and Brazil is the biggest exporter. And these tariffs, of course, had made it more expensive for American importers. The Japanese Prime Minister, Sanae Takaichi's cabinet, has approved a $135 billion economic stimulus package, the first major policy initiative under the new leader. She's pledged to pursue expansionary fiscal measures. The package will be funded by an expected rise in overall tax revenue reflecting inflation, as well as issuing additional government bonds. And Eurotunnel, the operator of the Channel Tunnel, has halted its UK projects, claiming unsustainable levels of taxation, which have made any future investment non-viable. The company said it had been informed that business rates would increase by some 200% from next year. The UK Treasury said it would support firms hit hardest by tax hikes and would continue talks with affected industries over such concerns. 1 week on since unionised baristas at Starbucks went on an unfair labour practice strike, their union says it's adding more than 24 new cities and stores to its picket lines. The strikes will now be held across 95 stores in 65 cities, with some 2,000 baristas engaged in the action. The union is hoping to make progress on several issues, including better working hours and higher wages. And just a quick look at the markets before we go. You can see here trading higher, again, thanks to those comments about interest rates. And that is all from us here on Business Today. Thanks for watching.